we are good to go. Now, Darren, whenever you're ready, you holler out and go, Mark, I got a question from so-and-so in some place. We need your first name and where you're from. It's a little more fun that way. I'm going to go to an IRA question. So this is from D. Chagra. Chagra? D. Chagra. Photo here looks like a male. I hope he's male because I really offend this woman, but no, he looks like a guy. All right, is there a way to make a Roth IRA? Is there a way to make a Roth IRA for real estate and still take money out from the cash flow? Generally, no, but there's a couple little exceptions. Let me throw this out, everybody. So when we build our structure, as many of you know, what I'm trying to do is the trifecta. Your trust is down here. You own your small business, whether it's an S Corp or an LLC or a sole proprietorship. And you're kind of building your side hustle. You may have a day job and your income's all flowing down here to your 1040. We're off to the races. On this side of the equation, you might have a Roth IRA. You might have an old 401k. You might have a solo 401k, a traditional IRA. So what we call this is self-directing. And D. Chagra here, you can open up an LLC owned by your Roth. Very common. I have several LLCs like this. We do set these up every day around the country. So the Roth could go out and buy a rental property. The profits from this rental are going to go back to the LLC. And if the profits, whatever profit goes into the LLC is really that of the owners, and you're not the owner, your Roth is the owner. So when you go to sell the house, any profit, any cash flow, all that stuff is going to go into your LLC and then down to your Roth. Down the road, you can take this money and move it somewhere else or retire and cash in and all that. And you young people, please, please, please start investing in Roths right away. I teach so many little classes on Acorns and Robinhood and Stash and getting that money rolling so you can start building a future pot of gold. And we meet with so many clients that are in their 60s and just say, I'm starting to save for retirement. What do I do? And they're scared to death. You don't want to be caught like that. Dave Ramsey's message of getting out of debt and saving right away, love him. He's right on it. Okay, so the money goes to the Roth, and D. Shog was like, well, I want some of that money. You think you do, but you don't. I want you to leave the money here, let it grow, build a future tax-free bucket for the future that you don't touch right now. Now, it is true, the little yes that I was going to say is you can take a Roth and any contributions to the Roth always come out tax-free and penalty-free, but the profits have to stay in the Roth or they're going to get penalty and tax. So any contributions can always come out penalty-free and tax-free. And also, if you're in a Roth 401k, which you can have a Roth inside a 401k, you can borrow from it up to 50% or 50 grand, whichever's less, and pay back interest to yourself tax-free. So there's ways to access the Roth money, but generally you're not living on the cash flow. You're going to be plowing it into that Roth IRA. Okay, Darren, let's go. Where are we going? YouTube or Facebook? Talk to me.
All right, we're going to YouTube. So
right.
We've got Steve in Georgia. Steve says, you mentioned covering $1 million if you set up an S Corp for anyone and the IRS finds an issue. Is that guaranteed?
I mentioned what? Covering an S?
$1 million. I'm guessing the malpractice.
Oh, okay. And what's his name? Steve? Steve in Georgia. He may be referring to statements of mine in the past. Law firms and accounting firms carry malpractice insurance. Our policy might be even a couple $1 million. So it's very common for CPAs and attorneys that are giving tax and legal advice to carry malpractice insurance because if we're wrong, we're going to pay the bill and we're liable for that. It's just like going to a doctor that does surgery and something bad goes wrong and they have to make a claim on their malpractice insurance. So Steve, I may say that because I do stand behind that. We rarely give out refunds because people are really happy. But if someone's not happy and we really did wrong, and I'm going to talk to the client and talk to my staff member and figure out if they just didn't like the answer, but we really did do the work. That can be a variable. But anybody out there, whether it's Mark Kohler or not, this is why you hire attorneys and CPAs that are licensed. Because if they screw it up, they're liable for the penalties and interest on the penalties and who knows what if they do it wrong. So, Steve, I stand behind our work. I want to protect my reputation, and I carry malpractice insurance for that purpose. We may even have more than $1 million. So, Steve, if you're asking that, you've probably had a bad experience with a professional before. Call, talk to us. Let me know what's going on. If you've ever had a hard time with us or any of my team members, please know we've been in business 20 years and we're trying to do the best we can. But if you have a problem, let me know. So, thanks, Darren, for that hard question. Jeez. Okay, gosh. But you know what? Yeah, throw out another one, I guess. Man.
We got Calvin McDougall. He asks, what about putting your money into a living life insurance policy?
Oh my gosh. You are throwing me hardballs. Go. First name again? McDougall?
Calvin.
Calvin says, Mark, what about putting money into a whole life insurance policy? There's a lot of creative names for this. Bank on You, Infinity Banking, Universal Life. There's just every insurance company, so many insurance companies every year try to come up with a new creative way to sell cash value life insurance. Now, is cash value, VUL, variable life, whole life, whatever you want to call it, is it bad? No. I've owned a whole life policy in the past. I don't right now. I'm gonna alienate some of my followers and some of the insurance agents out there, and I'm willing to take a call and talk with you about my opinions so that you can maybe sway me. But here's my argument, everybody. When you put money into a life insurance policy, you don't get a tax deduction. Fine, I can live with that. Then it goes into this insurance broker's big pool of money, and any growth in that insurance cash value is tax free. Do you get to control the investments? No, which I don't like. I don't like giving my money to Wall Street to invest for me. But let's say they get an 8 to 10% return or better in the insurance policy. You don't pay tax on that. Then someday you can borrow against that life insurance policy tax-free. And you don't pay taxes on that. And if you die, the death benefit pays off the loan. Does it work? Yes. Is it totally honest? Absolutely. Here's what the problem is, in my opinion. To me, if you're thinking of a buffet or a really nice dinner, the whole life insurance is the dessert. In fact, it's probably the brandy or the coffee after dinner. It's something you do, in my opinion, after all the other basics are taken advantage of. Now, I know some insurance agents are out there saying, nope, you need to do it right away. It's important. And they'll even talk people into doing it on their kids. Been there, done that. But here's my concern. If you can't keep up the premiums, and you insurance agents out there know this, if a policyholder cannot keep up with the premiums, what do you say? The cash value will cover the premiums for you for a while. And then if this person had a financial disaster where they're not able to catch up with the premiums, the policy falls apart. It's gone. And the only winner is the insurance company and agent that sold it. My concern is a lot of people get sold life insurance policies that don't have the financial stability to weather the problems of life and maintain those policy premiums no matter what happens. And then the policy goes away and dies and you lose. Happened to me. Now, is it still a valid strategy? Absolutely. And I recommend it to my clients that have a strong net worth. They've got great cash flow. They funded their retirement accounts. They've got a little bit of this or real estate. They're out of credit card debt. They own their home, whatever. They've got financial stability where if a pandemic hits, they can pay the premium for 1 or 2 years if they have to without any income. If they can't, in my opinion, that person should not be sold a policy. And I think many of you insurance agents out there would agree with me. So it's probably not you watching my podcast that's the problem. But there's a lot of people sold whole life insurance that they're on the cusp of bankruptcy and it is, and they can't maintain that when crap happens. That's my problem. So anybody out there that's being pitched or presented a whole life insurance policy, love it. It's great. Just make sure you've got the financial stability and strength to maintain it no matter what comes. And maybe you need to do some other basics to get your foundation stronger first. Let the hate mail come. And it does. I apologize. All right. I'm going to go to Instagram because Darren keeps asking me hard questions, damn it. Okay. And then we're going to do Gone in 60 Seconds in a minute. All right. Okay. Benefits. Oh, boy, that's a hard one. Actually, okay. I've been choosing hard questions, too. Okay. Let's go to Our Mountain Home. This woman with her cute little dog right next to her asks, what's the best way to learn and become efficient with QuickBooks? Well, for you entrepreneurs out there, even with a side hustle, QuickBooks is, Intuit, you can send me a check, but I'll say it, QuickBooks is probably the best software in the country for the small business owner. I love it. QuickBooks, Quicken, QuickBooks Pro, Online QuickBooks, blah, blah, blah. They have like 17 different variations. I've been QuickBooks certified in the past. I probably need to get recertified this year. I love the bookkeeping features of QuickBooks. All of you as small business owners have got to get your bookkeeping dialed in. And that's one of the big hurdles for small business owners. They don't like to do books, and I get it. You can delegate it. You can have a family member do it, or you can do it. You can pay someone to do it. We help clients around the country doing it. But QuickBooks is where it's at. So Our Mountain Home says, how can I get efficient and become and learn and become better with QuickBooks? Here's what I would do. Start with online QuickBooks. Have a small business. Maybe it's a rental property or a little online business. My daughter Allison that's here in the room with me, she knows online QuickBooks. She had an online business for years. Do you still have that? You still a little bit, maybe? You might sell something once in a while. She's awesome. I'll have her come on camera and sell her website if I don't watch out. I'll get in trouble here. From her, not anyone else. She's not prepared to come in and pitch her business. But even when she was 18, 19 years old, she was using online QuickBooks. It's so user-friendly. And I hate to say it, they do dumb down the accounting process with their online system. But once you get the online system down and then you start expanding your business, then you can go to QuickBooks Pro and some of the desktop versions. Along the way, everybody out there, Our Mountain Home, everybody, there are so many good little snippets of YouTube videos on how to do QuickBooks. I've had my own YouTube video series for years. I have not updated it in the last year and a half, and so it's not available for sale right now. When it's done, anybody that's purchased it in the past is going to get the update. But start with online QuickBooks, watch little videos. There's a lot of forums on QuickBooks, and everybody make it a goal this year in 2021 to at least learn a little bit about it. And then you can expand into the future with better bookkeeping. Okay, Darren, what do you got? Tell me a question of someone out there. Are you answering questions too? You're okay. You're typing a little bit. All right. What do you got?
Okay, Micah from Hawaii. I just formed a real estate brokerage here in Hawaii. I'm looking to limit my tax liability as much as possible. Would you recommend I form a C Corp entity or an S Corp? Thanks.
Okay, thank you. And first name, Micah in Hawaii. And I've got Zach here asking a question on Instagram, Zach McPhee, that says, benefits of a C Corp, who do you suggest to use that entity and why? And that goes right along with Micah's question. Now, this will give me a chance to point this out. I've got my tax and legal playbook, which is a great handbook with 32 chapters on different strategies. There's one on C Corps. There's a chapter on S Corps, chapter on LLCs. They're only like 8 pages long. I have case examples and case studies, examples, charts. You'd love it. So if you're gonna own a little desktop reference tax book, everybody out there, small business owner, this is a good one. I'm gonna give it away today. I'll let Corey and Allison decide, one of our viewers on YouTube or Facebook, what your CPA isn't telling you. It's a story. It's a gateway drug to learning about taxes. You'll freaking love it. The Business Owner's Guide to Financial Freedom. When you're making money in your business, where do you deploy it? How much money do you drive back into your business? What Wall Street isn't telling you. You're going to love that. And then the creme de la creme, $99 on Amazon. And this is an awesome workbook. 8 steps to start and grow your current business, mature business or brand new. And I've got almost 60 videos in here, a downloadable business plan, marketing plan, strat plan. You just hold your QR code phone over this. Hold your phone over the QR code and you're off to watching videos. You're going to love it. I'll give this away too. So we're going to give away all these books. Allie and Corey, you decide who the winners are. I'll announce it at the end. Now to get in the drawing, can you see who shares this? No? Okay. So you have to share this video and you're in the drawing. Okay, now look up here, Zach and Micah, and any of you out there that are deciding which entity should I choose. Let's go there for a minute. And you guys were saying I needed to talk about ERTC and PPP, right? Okay, we're going to come to that right after this question. Micah started a brokerage. That means he's a real estate agent. That means he's creating ordinary income. If he's making more than 40 or 50 grand a year, he is going to want an S corporation. The S corporation will save him in FICA. There's no corporate tax. And FICA is Social Security and Medicare. And every dentist, doctor, engineer, plumber, online seller, affiliate marketer, anyone with a click funnel, CPAs, attorneys, we're all S corps. S corps. For my contractors, my builders, my fix and flippers, you want to be an S corp. C corps have corporate tax, and then you pay income tax. It's double tax. There's no write-offs in a C corp. They're going to make it worth it. And I stand behind that all day long. And I put it in my book and put my money where my mouth is, and I stand behind that. Yeah, there might be a creative write-off here and there with the C Corp, or, I'm going to change the fiscal year end. So I push the tax bill to the next year, and then da-da-da. So you save interest on the tax bill that you're going to pay anyway, but I've got double tax, and it's a freaking nightmare. Rarely do we ever recommend a C Corp. If anybody's recommending it, I'm not saying it's always bad, but it's rarely good. Rarely 2 out of 100 or whatever. So get a second opinion on the C Corp. But here's what we do for so many people. We start out with a sole proprietorship, and then you may graduate to an LLC, and then you kind of operate your business, see how it's going, making money. If you're already making money, 30 or 40 grand a year, 3 or 4 grand a month take home, we're going to immediately want to convert to an S Corp. And you can convert from a sole prop to an S Corp, but I can backdate into an S Corp with an LLC. We charge like $150. Easy schmeezy. So ultimately, I want to be an S Corp. I'm going to take a reasonable salary and push out all the K1 or net income down here and pay no corporate tax and no F word, FICA. I don't know what F word you were thinking about. No FICA. So this is a wonderful structure to push money out and save taxes. And the S Corp gives you protection and all the same freaking write-offs a C Corp or LLC gives you. And some of you in California might go, well, I got to pay $800 to have an S Corp. Let me see. If I save you $3 grand, is paying $800 worth it? Absolutely. And we're not going to recommend an S Corp till I save you enough to pay for the stupid thing and more. So that's where we're going to use the S Corp. The LLC sole prop is on this ordinary side. This is the ordinary income side. We're not going to use it over here on the asset side. The asset side is where we have our rentals and our Bitcoin and our gold and silver and blah, blah, blah. And this is where we have our IRAs and our 401ks and our Roths and Coverdales and all these cool HSA things. And so we're going to be building wealth in multiple ways. But this is the asset side. This is the operation side. And it all flows down into your revocable living trust, which we hide you with privacy strategies and try to give you better estate planning and privacy and in that method. The protection is here in our entities. The trust does not give you protection, it gives you privacy. And a bulletproof vest and camouflage together are the best. Okay. All right, I'm going to talk about ERTC and PPP a little bit.
Can we do one giveaway?
One giveaway. Who are we giving away what?
Tax and Legal Playbook to Josh Rucker.
Josh Rucker.
On Facebook.
On Facebook. Josh, you are the winner of the Tax and Legal Playbook. Make sure you email Corey. C-O...
Write it on there.
Corey. Okay, write it right here. It's Corey at markjkohler.com. And if you email Corey your mailing address, I can personalize it, sign it at least, and we'll send that right out to you. So Josh, congrats, you're the winner. I'm going to give away 3 more books for those that are here still online with us. Okay. Everybody take a breath. We got to talk about ERTC and PPP. Now, when COVID hit in 2020, they passed the CARES Act, Congress. And the CARES Act said, we're going to help out business owners with a variety of benefits. But the 2 biggies were you could do PPP, the Paycheck Protection Program, which was a loan, or you could do ERTC, which is a refundable tax credit, Employee Retention Tax Credit, Paycheck Protection Program. I'm not going to write it down here, too much. But you had to choose either or. Meanwhile, everybody was like, well, I'm going to get taxed on this. How do I get it forgiven? It's a big mess, blah, blah, blah. And everybody was freaking out. And so right before Trump left office, he and Congress got together and said, you know what? Right here at the beginning of 2021, they passed the next COVID relief bill as part of the Appropriations Act. And it was 5,500 pages long. This thing's a bear. But it's called the COVID Relief Act. And there's a lot of bigger acronyms and names in this 5,500 page deal. But in this deal, they said, hey, anybody that had a PPP loan, 1-page forgiveness app. If it's under 150 grand, easy schmeezy. Fill this damn thing out, you're done. So that was the first thing. Is almost automatic forgiveness. And then forgiveness. And then it said, we're going to also make sure that it's a complete write-off. It's tax-free. You get to write off all the things you've spent the money on, and you don't have to claim the loan as income. And that went for ERTC too. So any of these benefits are tax-free. So tax-free. So everybody was loving it. But then it got better. They threw in some Ginsu knives. No, they didn't. Okay, but what they said is first, we're going to do another round of PPP, and March 31st is the deadline to apply. So we got a full month still. I'm going to be talking about it for another month. And they said you can do ERTC for the first 2 quarters, first and second quarter of 2021, and you can get up to $7,000 per employee, but it can't be for you or your family members. It has to be outside employees. You can do PPP and you can do ERTC, which was never allowed. So you get $7,000 per employee. It's up to 70% of $10,000 of payroll per quarter, blah, blah, blah. Now, I've got an article at entrepreneur.com, and if you just Google Kohler ERTC, done. You're going to see the article. It's pretty lengthy, but I go through every variable. And I give you the forms to use and how to apply and blah, blah, blah. You're going to love it. So go to my article on the ERTC. Matt Sorensen, my partner, wrote an article on PPP. It's also on the Entrepreneur website. And I'm going to probably do a new updated article as well this month. So these 2 articles, 1 and 2, you can just easily find on Entrepreneur's website. They are the leader on this. We love Entrepreneur and grateful to we can be on their Facebook today. So go read these, but you can do both. And guess what, Corey? What does it get? It gets better. You get Ginsu knives. No, you don't get Ginsu knives. But what you get, I'm sorry, I got to ham this up, people. No one likes this topic. You get to go back. You can go back to 2020. And if you got the PPP, you can also get the ERTC. You can get both. And the test to see if you qualify is super easy. You just have to say, yep, for at least 1 day in 2020, the government shut down my business or suspended it. You're in. There's a 50% reduction in sales test, or I was shut down for a day, and you qualify. It's freaking awesome. So, partial shutdown, I'm going to say. So, go read my article. You can get the ERTC and the PPP and go back and get it for 2020, and you can get it for 2021. The test to get the PPP and the ERTC in 2021, you got to show that your business had some reduction in sales. It's tougher. But a lot of people that already got PPP can now go get ERTC usually, more than likely. Any questions, Darren, on those two topics that you think everybody would like me to field? Anything in there? Anything, Allie, on Instagram?
1 second, let me look.
Okay, so Allie's looking. All of you can stand up, do some jumping jacks, order some Ginsu knives, whatever you want. Okay, I'm going to answer another question, and I wish I had the answer. Now, this is Christian Hung in New York City. And Christian, I'm looking at this cute little photo of their child here, says, does an S Corp make sense in New York City when it comes to tax savings versus just a basic LLC? Well, let me tell you the problem in New York City. Not that there's a lot of problems, because I love New York City. I lived in New York City for a couple of years. Just love it there. So here's your trifecta. You got your IRAs over here. You've got your rentals over here in an LLC. And you've got your short-term income over here. And Christian is doing business in New York City. So his big debate is, do I do an LLC or an S Corp? Now, many of you, and this is absolutely true, in almost every other part of the country, every state, every city, if you're making more than 40 grand, I'm going right here, S Corp, every time, period. The problem with New York City, though, is the 5 boroughs. And if some of you don't know what the 5 boroughs are, if you live in New York, you know. Staten Island, Brooklyn, Queens, New York, Bronx. Those are your 5 boroughs. They are considered part of the city. They are within New York City. And if you live in New York City, those 5 boroughs, you've got to file a city tax return on top of the state tax return, on top of the federal tax return. And I know you people hate it. I hated it. No fun. And what the New York City tax department, I'll just leave it at that, is, and I apologize, is it the New York Tax Authority? I can't remember at the moment, so forgive me. Department of Taxation. I deal with so many cities and states, it gets hard. But here's the problem in New York City. The S Corp is treated like a C Corp for city purposes. So there's an extra tax here. Now, you have to compare what am I saving in FICA with the federal and compare it to the cost of this. So you're going to do this cost benefit analysis. And it's a tricky one because you're going to save money on FICA. No doubt about it. But then you're also going to pay this extra tax being in the city. And the hard answer is, Christian, based on your income, there's a spot where the S Corp makes total sense. Then there's a spot where the LLC makes better sense. And then there's a spot where the S Corp makes sense. And it depends on your income and all this other garbage. And Darren, I know we have some spreadsheets on this, and we've analyzed it for certain clients. I was going to write an article on it someday. But Christian, the answer is it depends. And everybody out there, again, if you weren't in New York City and you're making more than 40 grand net a year, boom, I'm going S Corp. But in New York City, you really need to meet with your CPA and kind of go through it and run the numbers. And right now, I'd say get with Devin in my office. Wouldn't you recommend that, Darren? I'd get with Devin Munns. I'm going to put that here. Devin Munns is a tax attorney in my office. You could schedule him for an hour, $400, and say, Devin, run the numbers for me. And our goal is to save you 10 times that. And that's what we want to do. And you may have some other questions and some other plans. But if any of you need a consult with any of our tax attorneys, Darren here too, call 435-586-9366. We have 7 tax attorneys. And this is not an infomercial for our firm. I just want to tell you that's what you should be looking for, someone that can break this down for you. Okay, let's give away another book. Do we have a winner? Allie, do you want to pick someone on Instagram?
Yes, I'll pick someone after the video is posted. You have to share it, and then I'll pick the winner from that.
Okay, so Allie's going to post the video,
Yeah.
and we're going to give away what your CPA isn't telling you, the book, the masterpiece, the Pulitzer Prize winning, no, it's not, book. Allie is going to choose a winner, and she will message you on Instagram. So, Allie, I'm going to give this book to you. That's for you to give away. All right. I got to move my Tesla truck. For some of you who haven't seen this, this is my Tesla truck. Someday I'll have the real truck. I'm 236,000 person in line. Did you know that? But there's 750,000 people in line, plus. I'm in the front third of the line.
I have a question.
Go Elon Musk. Okay, Allie's got a question on Instagram.
Okay. Maria12 asked, does the ERTC apply to paying subs?
No. So Maria asked on Instagram, does the ERTC apply to paying subcontractors? No. So in your business, whether you're a sole proprietor, an LLC, an S Corp, or a C Corp, no matter what business you are, in order to get the PPP or the ERTC, any of those two, you have to be paying a W-2 to employees. If you're 1099ing someone, a 1099 NEC is what it's called now, a 1099 NEC, that does not count. Now for the ERTC, the W-2 for the owner of the business and their family doesn't count. But the PPP, you can count your own payroll for you or your profit out of an LLC or S Corp. But the ERTC has to be third-party employees. Sorry, Maria. Okay, next question, Darren.
Okay, we have one from Baguetto.
The ghetto?
Baguetto.
Oh, the ghetto. Okay, I thought it said someone's calling us from the ghetto? Killer. Okay, the ghetto. Okay, from where? We don't know.
We don't know.
From Duluth, Minnesota, the ghetto. Okay.
He asked, does the ERTC apply to new employees added in Q1 or Q2?
Yes. So if you didn't hear, Darren's got a booming voice. He's trying to talk loud so everybody hears it. So I'm going to say it twice, though. In our structure, I'm just visual. I want to have a structure here. So if I've got my business, so let's just call this your entity, whatever it is, and you're paying your employees W-2. And here is 2020, and here is 2021. So first, second, third, and fourth quarter. So Vegetto says, well, COVID kicked my butt in 2020. I've got a reduction in sales compared to 2019. That's going to be the test generally. Not generally, that's your test. Your sales in 2020 were less than 2019. And that allows you to get in the door for 2021. And you've got to have 20% reduction in sales during that. Compare one quarter of 2020 to one quarter of 2019. Now, I explain that in my article with little diagrams too. It's really easy. Go read the article. But he said, well, I've got new employees. I've got new employees in the first and second quarter of 2021. So can I take the ERTC for them? Yes, you can. You're also going to, Vegetto, probably, if it was me, I'm going to try to get you the PPP plus the ERTC. You have to have a 25% reduction in sales from 2020 to 2019 to get into the PPP. You have to have just a 20% reduction in sales from 2020 compared to 2019 to get into the 2021 benefit. So you've still got time to apply. I would run the numbers on both. The applications are not that difficult. And new employees count. So I like it. Okay, Darren, another question.
This one is from Pinnacle Accounting. Can you get the ERTC as a business without employees?
No. Pinnacle Accounting asked, can you get the ERTC if I don't have employees? No. Because it's an employee retention, meaning you're keeping your employees on payroll, tax credit. So that's the definition. Employee retention tax credit. and you can't claim it on yourself or your spouse or kids. Now, I'd love to put the spouse and kids on payroll, but it doesn't get you the ERTC. So you have to have employees, and it does not work for subs. Okay, Ali, you got a question?
Hector Castelloni asked, how do we apply for an ERTC? Do we go back to the same bank who helped us for our PPP?
Oh, this is good. What's his first name? Victor?
Hector.
Hector. Sorry, Hector. I apologize. Hector says, where do I go to apply for the ERTC? Do I go back to my bank? Ooh, no, everybody, this is so important. The PPP is a loan that you got at a bank last year, right? You went to a bank to get your loan. You can go back to the same bank if you want, or go to a new bank for the next round of PPP. Do not care. And let's just throw out a curveball here. The EIDL, remember the EIDL grant that was $1,000 per employee up to $10,000, which is now free grant money. You don't have to claim it or anything. Automatically forgiven. Done. The EIDL grant, you applied to the SBA to get that. Remember, you went to the SBA website. So I went to the SBA website for the EIDL. I went to a bank for my PPP. How do you get the ERTC? Well, if you're going back to 2020 to get it, you're going to file a 941X. You're going to file an amended payroll report. That's what you do. And I've got it, it's in my article. You're going to go back and file an amended payroll return. And for the quarter that you're claiming the credit, and they're going to send you a check. You just get a check in the mail. Done. If you're applying for 2021, you actually have two options. You can wait to claim the credit when you file your 941. Isn't this crazy? There's so much here. You can go and file. I'm going to put that as number 2. When you file your 941, you claim the credit. And you might get it refunded because you already paid in, or you might get some money back. I don't know. But you're going to file for on your 941 at the end of the quarter. Now remember, everybody, when you're dealing with this in 2021, you got first quarter and second quarter. When do you file your payroll report for first quarter? Well, this is January, February, March. You send in your 941 in April. That 941 is where you'll claim the ERTC. Second quarter, you're going to do that because you got January, February, March, April, May, June. You're going to apply in July for the 941 and get the ERTC then. Okay, that's if you go with just the file in the 941. You can actually get an advance on the credit. So you can apply for an advance. Now the form number, I don't remember right now, it's in my article, but you can apply for an advance. And the form is on the IRS website. And I give you the link so you could apply for an advance. And that's free money too. This is free money, people. I'm glad you're listening. You're in the know. Please share this with another business owner you know. So you can go get the ERTC, but you do it, Hector, by doing it on your IRS forms. I'm going to even put this in red just so we can get this out here so everybody can see this. So you're going to use an IRS, okay, slow down. That got jacked up. Oh, that's what I changed. Okay, so you're going to do it here on an IRS form for your ERTC. You're going to do the PPP at your bank. And if you want a loan from the SBA, you go to the SBA website for an economic injury disaster loan, which is not free money. You're going to pay that back. All right. Okay. Someone throw me a softball. Come on. Oh, Darren's got a softball. All right.
Okay. Got Daniel on Facebook. He asks, would the PPP only apply if you had an LLC versus filing under your own social security number?
That was your softball. Okay. Jeez, son of a... Okay. Daniel says, I want the PPP. And he said, I was a sole proprietor under my social security number. Okay, I'm cool with that. Or he said, did I have to have an LLC with an EIN? Well, believe it or not, you can have an LLC and do it under your EIN or your social security number. You can do either one. Or an S Corp with an EIN. With an S Corp, you have to have an EIN. Okay, so Daniel says, let me get this straight, Darren. He says, I want to go get the PPP for 2021, and I'm going to do an application. You're going to go to the bank to do your application. Now, on our articles, we've got links to the applications as well. But you're going to do a PPP application, Daniel, for 2021. You can do it as a sole proprietorship. You're going to look at your profit on your Schedule E plus any payroll that you paid to employees, outside employees. Whatever that total is, and there's a few more numbers in here, but minor numbers. You're really looking at your gross payroll on W-2s to others, plus your Schedule E profit that you took home. Oh, you want me over here? Okay. So you got a Schedule E plus your payroll. And then you're going to take the total and then divide it by 12 and then multiply it by 2.5 and blah, blah, blah. But the point is, yes, Daniel, you can do it in a sole proprietor. You don't have to have an LLC. Now, if you have an LLC, you're going to be doing a Schedule E anyway. And you're going to do the same way. You're going to do it the same way. Now, if you have an LLC taxed as an S Corp, hold the phone, whole other rule, because you're going to be taking a W-2 plus the W-2 to all your employees. That is a different method. You don't get to use your profit from the S Corp. You have to stick to your W-2 because that's how S Corps work. So, Daniel, you're good. I don't see a problem. So, we're good. Allie, you said you had a question on Instagram.
Yeah, hopefully this is a softball.
Okay. Now, after this question, I'm going to give away another book. Then we're going to do Gone in 60 Seconds. I'm going to try to answer questions in 60 seconds or less. This is going to be hard. Okay, Allie, what's the question?
So Sprongster asked, jumped in late, wanted to see if others are having issues with PPP. Brother got PPP number 1 via Wells Fargo. They are now saying the calculation is wrong after applying for PPP number 2. But the calculation is correct and Wells Fargo is not helping. They only say to reapply. So didn't work. Who can we reach out to?
Okay. And this is
Sprongster.
Bronxter. Okay. You might be in the Bronx. I spent some time in the Bronx. I loved it. I was kind of a missionary out there helping people in the Bronx. Loved it. Okay. Bronxter. Everybody listen. This is a good question. Bronxter says, having a problem with the PPP. My brother got PPP money the first round. Then he went to go apply for the second round, and Wells Fargo was like, "Weep, you jacked up your first app. They don't like a second app, and they're just kind of giving him a hard time." Bronxter, the easiest answer is go to a different bank. You don't have to go to Wells Fargo. So I would try a different bank. And I'll tell you what, Matt and I, my partner Matt Sorensen and I, we found the local banks to be actually more cooperative and helpful. So you could go to a credit union, but and you typically want to just go to a local bank. I had clients that went to banks in other states. It doesn't have to be a bank you go to. So I would find a local bank and just say, hey, I need help with a PPP loan, and go in. And a couple of tips here, people. Bankers are on a need-to-know basis. Keep it simple. Don't tell them your life story. Go in and say, here's my profit from last year. Here's my payroll. I need the PPP. Don't start blah, 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 blah. Weren't we talking about this right before we started the podcast? I mean, the webinar. I was on a phone call with a banker right before this. And I was kind of pulling my hair out. And I was like, ugh. And it's not that bankers are bad people. They're stuck in a system. And the banking system is like, they've got to know everything, and you got to give blood, and you got to donate your firstborn child to get a loan. I mean, right? I mean, it's just brutal. So keep it simple, Bronxter. Go to a new bank and start fresh. Now, I will say this. A lot of people that applied for the first round of PPP they didn't use the right numbers. They put in subcontractors. They may have included too much pay to themselves. They didn't really have a W-2 for themselves, so they kind of fudged. And people that kind of screwed up their first round of PPP, you want to do your second round correct. And Bronxter says, well, I know I'm correct. Wells Fargo's given me a problem. You might want to get a second opinion. Now, you can always retain one of my tax lawyers for half an hour. You can get on the phone with Darren for an hour in the next week and go, Darren, look at my PPP. What am I doing wrong? And we'll give you a third-party opinion. But don't just think Wells Fargo's crazy. You may want to have someone look at your numbers, but go to a new bank. All right. Gone in 60 seconds. You got the other camera ready? Okay. Here we go. I got to put my glasses on to read these. Now, Corey, you're my timer. Oh, we got to give away a book. Financial Freedom, Corey. Who gets Financial Freedom?
Aaron Schill from YouTube.
Aaron Schill from YouTube. Aaron Schill from YouTube. You got to email Corey your contact information. Corey at markjkohler.com. And he will get this book mailed out to you free of charge. I just ask that you keep following, keep sharing. Appreciate you being here, part of the community, part of the Kohler Nation. Got a great firm, great people. Hopefully we're helping you, Aaron. Okay. I'm going to try to answer these in 60 seconds or less. I'm going to read the question, which is part of the 60 seconds. Because, right, Allie? It's got to be 60 seconds or less. So you start my timer when I start reading. Okay, or you say go.
Ready and go.
Okay, question from Maria, 12 PS. I'm relocating to the state where my business is at. Can I write off child custody attorney? Why did I read this? Okay, this is hard. No, any sort of divorce child custody case is going to be a personal expense. It is not going to be a write-off for business. Now, your business attorney and CPA and other expenses are going to generally be a write-off. But Maria, I would get a consult with a tax attorney or someone in our office or an accountant and discuss why you're moving to the state. What are the expenses that are a write-off? But I will say in general, nannies, personal expenses for clothing, food, groceries, rent, unless we take the home office deduction for a part of that, it's not going to be a write-off. So good luck with that move. There you go. Boom, we did it in 58 seconds. All right, next one. I got to ask a good one here. Okay, here's our question. You tell me go.
Ready and go.
Okay, this is from Dinara Mirzakariyamova. Okay, on Instagram. Can I be self-employed and employee at the same time in the same business? Now, I think what Dinara is saying is she works for a company, she's got a W-2, and then they're going to 1099 her as well. Can they do that? Yes, but the services you're providing as a subcontractor have to be distinctly different than the services you're providing as an employee. And you got to meet the test of being a subcontractor or self-employed, independent from the test of where you're an employee, and you can't be doing the same thing. So, Dinara, is it possible? Yes. And I would love everybody. Do you know this morning at 8 a.m., I was writing a letter for a doctor who works at a hospital as an employee and as a subcontractor, making sure we just separate those two issues. So, check into it. It can work.
Awesome.
Woo! Okay, we're going to do a couple more. Do you like them, Allie? Are we good?
Yep.
Okay, I got to cross out the ones we've done. Boom, boom. How's everybody doing, Darren? I hope you guys are happy on social media. Give me a shout out. Give me some love. I'm nervous. I don't want to let any of you down. Okay, I'm going to do Jimmy. I know, Jimmy Orozco. He's a regular listener. I've seen his questions before. Okay, give me the start.
Ready and go.
Okay, question from Jimmy on Instagram. Do I have to send in quarterly payments? Can't I just wait till the end of the year? Well, Jimmy, the answer is generally no. Yes, no. You can do both, but let me say this. Jimmy, if you wait till the end of the year to make one big payment to the IRS, they don't like that. And there's going to probably be penalties and some interest. So can you wait till the end of the year? Sure. You're not going to jail, but you're going to pay some interest and penalties. Sometimes I do. I don't always make the full payment every quarter in my small business. the way I should, and so I pay some penalties and interest. Now, with that said, if you have payroll for other employees, you are making your deposits when you're supposed to and have to. It's bad not to do that. And also, Jimmy, it's good to make quarterly payments because you don't want to get caught with your pants down with a huge payment at the end of the year. So try to make quarterly payments. It's in your best interest. Woo! Boom. All right. I hope this is fun. Okay. This is from Panasui, P-N-A-S-U-I. Okay, you ready?
Ready, go.
All right, this is a question from Panasui, P-N-A-S-U-I on Instagram. Is a loan from S Corp to another S Corp a good way to allocate income from one business to another? The answer is no. Can people see me on the whiteboard?
Yes.
Okay, so let's go to the whiteboard. If you have an S Corp, I really want clients to have only one S Corp in their life. And when you take profit from it, that's cool. I'm going to call it a draw, and I'm going to move that money over into another LLC to buy rentals. I'm not going to do a loan. I don't like to do loans from one entity to another when it's the same person. I just do a draw and a contribution, or a distribution contribution. So let's go distribution contribution. That's how I normally do it. And if you have two S Corps, I got a problem with that already. I don't like that. I want one S Corp in your life. Don't do loans back and forth. Do a distribution and then a contribution. It's simpler. I hope that helps. Okay, one more. Ooh, this is so stressful. Okay. Okay, I'm going to do investing young. This is the last one. Okay. Investing young or investing young. Okay.
Ready, go.
Okay, off to the races. Question from Invest Young. Are B Corps, B as in boy, like 4Ocean, a thing? So some of you have never heard of a B Corp. I've been talking about S Corps and C Corps. What is a B Corp? Well, a B Corp is short for Benefit Corporation. So, and are they a thing? Yeah, they're kind of a thing. So you set up a corporation at the state and you call it a B Corp. It's called a benefit corporation, and then you can make it an S election. You can take an S election and turn it into an S Corp for tax purposes. So why do you do a B Corp? When you register as a B Corp, you're saying, I'm going to dedicate 10%, usually 5 or 10 or 15% of my profit to charity. I'm going to help the world be a better place. And you are committing to give money to charity for a certain percentage, and that qualifies you as a benefit corp. It may help you do better business or more business. It's a good thing. Woo, that was tight. Okay, well, let's get back to a couple other questions, and then we'll call it a day. Hope everybody's having a good time. And then we're going to give away as our grand finale prize our $99 8 steps to start and grow your business. This is a tax write-off. Get over to Amazon. You'll freaking love it. Okay, Darren, what do we got? Anything good? Good question? You've been typing away over there. You helping people out? Okay. Everybody give him a thank you on your little message thing. Darren's over there working hard. Okay.
All right, we've got Daniel in Arkansas. Would forming an LLC be best for buying a duplex, living in one side, and renting out the other?
Ooh, Daniel in Arkansas says, I'm buying a duplex, and would an LLC, so here's our duplex, would it be smart to have an LLC own the duplex where Darren is going to live in half of it is his personal residence? I think, Daniel, the real answer here is, what is the intent of this property? It's almost 6 half dozen the other. If you put it in an LLC, you're still only going to write off half as a rental. Can you put it in an LLC and still count half as your primary residence and get the 2 out of 5 sale of home exemption? Absolutely. So it's not going to hurt you putting it in an LLC. But the problem is, if there's a lawsuit with one of your tenants here, then normally we're trying to do an LLC to protect your home from the rental. Well, the rental is part of your home. And so if they sue you, the LLC is not really protecting your home. Now, the LLC could be protecting other things. So Daniel, that's why I need to know your big picture. If you're going to keep this as a rental in the long run and you're just going to live there for a short time so you got an owner-occupied loan and something Allie and I were talking about before the show, so you want an owner-occupied 5% down loan, I'm going to probably keep it in your name, and then when you move out, I'll put it in an LLC if you're going to keep it as a rental. If you're not going to keep it as a rental and just sell it and you don't have a lot of other assets, I don't think the LLC really saves you. So I hope that helps out, Daniel. I get a consult, again, with an attorney that understands taxes that you trust. You can do it with our office, schedule a half hour, an hour in the next couple of weeks, talk about it. But it kind of depends on your other assets and what your plans are for the property. So, but it's not going to hurt you either way tax-wise. You're going to get the same tax benefit. We're talking about protection. All right, last question. Do I go with Allie on Instagram or okay, we're going to go with Allie on Instagram.
Okay. Danielle on Instagram asked if I'm an independent contractor, 1099 for multiple jobs, is a sole prop my best bet considering I have no liability issues or business partners?
Oh, Danielle says she is a sole proprietor with multiple 1099s. Cool. Oh, Danielle, I'm glad you asked this question. And she goes, I don't have any liability exposure. She's just selling crap on eBay, doing marketing online. I don't know. She's like, I don't have any liability exposure, so I don't need an LLC or an S Corp, right? Oh, I don't know, Danielle. Let's run the numbers. This is going to be good. Let's go to red here. Let's make this red. Let's say that Danielle brings in 80 grand. Now, Danielle, if you bring in less than that, so be it. I'm just going to run some numbers and give an example. If you bring in more than that, I don't know. So let's just run an example here. Let's say she brings in 80,000 in 1099s, multiple 1099s, sells on eBay, PayPal, Venmo, I don't care. She brings in 80 grand. And let's say she spends 20 grand on expenses, auto, cell phone, home office, travel, dining, equipment, cell phone, blah. She writes it all off. She nets 60. Okay. Do you need an LLC for asset protection? Nope. Would an LLC save you taxes? Nope. Ooh, what's the problem here? She's got 60 grand of self-employment income. That's subject to FICA, the F word. That's 15%. What? That is $9,000 in self-employment tax, plus state tax if she lives in one of the 41 states that have state tax, and federal. So you're getting triple whammied, Danielle. So you go, well, I don't need an LLC. You're right. An LLC is not going to save taxes. LLCs do not save taxes. What we would probably do in this situation, and if you called me, I can't say probably, I'd say this is what we'd recommend. Absolutely. I don't know all your facts, but I'm all in a vacuum. Here's what I'd say. Let's run the same numbers through an S Corp. 80 grand, 20 grand in expenses, net 60. Well, what's so great about this? Well, what I can do is take 30 grand, I'll go 50-50 split, let's say, 30 grand in a W-2 and 30 grand in a draw or dividend or pass-through or net. See, you can split the income in an S Corp. That's what they're for. That's what all of us do. This is so common. This is not high risk. So now that I've split the income, I'm taking part with W-2, paying my FICA, 15.3%. IRS is happy. But over here, look at this. No corporate tax, no self-employment tax. So this $9,000 bill, I just cut it in half. I just saved $4,500, Danielle, by going to an S Corp. You're not going to an S Corp for asset protection. You're going to an S Corp to save self-employment tax. I have a lot of clients that don't have partners, don't have liability, but they're paying too much in tax. That's the S Corp. Read my book, Tax and Legal Playbook. Go to YouTube and type in Kohler S Corp. Read up on it, study up, get with one of my attorneys. We'll set you up an S Corp for $800 plus filing fee, and you're off to the races saving money. Everybody, thank you for being here today. I love the small business. I love entrepreneurship and the American dream. Don't give up. I'll be here every Thursday at 4 o'clock live Mountain Time on YouTube and Facebook and Instagram trying to change the world. So please share this, put it on your calendar. See you next week.